Hey everyone, welcome back to Corporate Dakota, the place where we pull back the curtain on the big players and see what is really going on behind the corporate jargon. Today we are looking at an amendment to a report filed by Hormel Foods Corporation, the makers of Spam and Skippy peanut butter. Stick around because we've got some interesting insights into how they are compensating their new interim CFO that might surprise you before we dive in. If you appreciate getting these straight to the point insights from official corporate documents, make sure you are subscribed. We also have a growing Discord community where we dig even deeper into these filings. You can find the link in the description below. This isn't a brand new report, but an amendment, meaning they are updating or correcting something from a previous filing. Think of it like sending a corrected version of a letter you already sent. The original filing was on the 29th of October 2025. And this amendment is dated the 23rd of October 2025, which is a little bit of a timing quirk, but the core of it is about changes in compensation. So the big news here is about a new interim chief financial officer, or CFO, and controller named Paul Kahneman. He stepped into this role on the 27th of October 2025. Now, when someone takes on a big leadership role like this, especially an interim one, companies have to disclose the compensation package they are offering. And this amendment lays out exactly what Mr. Kahneman will be getting paid. Let's break down the money. First off, his base salary. For his work as interim CFO and controller, he's getting a salary of $500,000 per year. That is a pretty substantial paycheck, reflecting the critical nature of his responsibilities at a company like Hormel. But it doesn't stop there. He is also going to participate in the company's annual short-term incentive program. This is like a bonus based on how the company does over the year. For the fiscal year 2026, his target bonus is $300,000. So, if the company hits its goals, he stands to make a significant chunk on top of his salary. Then we get into share-based compensation. He's been granted 70,000 operators shares for that same fiscal year 2026 performance period. These are essentially company shares or rights to shares that he'll receive. This is a common way for companies to align executive interests with those of the shareholders. If the company's stock price goes up, these shares become more valuable. Looking even further out, he is also set to receive long-term incentives. For fiscal year 2026, the total target for this is $550,000. This type of compensation is often spread out over several years and is designed to keep executives around and focused on the company's long-term success. Part of that long-term incentive, specifically $125,000, will be in the form of cash awards. These will be based on achieving certain long-term performance goals. So again, it is tied to how well the company performs over a longer horizon. Another $125,000 will come as stock option awards. Stock options give the holder the right to buy company stock at a predetermined price. If the stock price rises above that price, the options become valuable. And the largest chunk of the long-term incentives, $300,000, will be in time-based restricted stock units. These are shares that he will receive over a certain period of time, as long as he remains employed by the company. This is all about rewarding loyalty and long-term commitment. On top of all that, he gets the standard package of executive benefits. This usually includes things like health insurance, life insurance, and other perks that are common for top executives. It is also worth noting that Mr. Kahneman will be covered by the company's standard indemnification agreement for senior executives. This basically means the company will protect him from certain liabilities that might arise from his actions while in his role, so long as he acted in good faith. And he has also signed the standard restrictive covenant agreement. This typically includes things like non-disclosure agreements and protections against him competing with Hormel if and when he leaves the company. These are pretty standard for executive roles. So what does all this mean? On the surface, it is a very generous compensation package, which isn't unusual for a top financial executive, especially stepping into an interim role during what could be a transition period. The mix of salary, short-term bonuses, and long-term incentives, including cash options and restricted stock, is designed to incentivize performance at all levels. The $500,000 salary alone is a significant figure, but when you add in the potential bonuses and long-term awards, his total compensation could be well into the seven figures, especially if the company performs strongly. For Hormel Foods Corporation, this indicates they are serious about filling this critical role with experienced leadership. The structure of the compensation, particularly the long-term incentives, suggests a focus on retaining talent and aligning executive interests with the company's sustained growth and profitability. However, it is always worth keeping an eye on executive compensation trends. While necessary to attract top talent, these large packages can also be a point of scrutiny for investors if the company's overall financial performance doesn't quite match up. Essentially, they are betting big on Mr. Kahneman to steer their finances effectively. Now, looking at these numbers and the overall compensation, Hormel appears to be prioritizing stability and expertise in its financial leadership during this interim period. The inclusion of various incentive structures, from annual bonuses to long-term stock and cash awards, signals a commitment to performance-driven rewards. The potential for significant upside for Mr. Queeneman is clearly tied to the company's bottom line and share price performance, a strategy that has become standard practice for many publicly traded companies. When we look at the bigger picture though, Hormel Foods is a well-established company in the food industry. They have a diverse portfolio of brands beyond their most famous ones. Their ability to offer such compensation speaks to their financial strength, but it also highlights the increasing cost of top-tier executive talent. One thing to watch would be how this interim leadership navigates any potential challenges or opportunities that might arise in the coming fiscal years, and whether this compensation package proves to be a wise investment for the company and its shareholders. Overall, this amendment mainly serves to disclose the financial arrangements for a key executive. It shows a company that is willing to invest in leadership. The risks here are standard for any publicly traded company involving executive compensation, ensuring that shareholder value is created to justify these payouts. Opportunities lie in Mr. Queeneman's potential to implement strong financial strategies that drive profitability and growth for Hormel Foods. Alright, that is our breakdown of this Hormel Foods amendment. What is your take on this executive compensation package and what it signals for the company's future? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps us out, and subscribing ensures you don't miss our future deep dives. Don't forget to check out the Discord in the description for more in-depth discussions. Thanks for watching, and we'll see you next time.